Market recap for Wednesday, 4th of March 2026. Well, all I can say, the market is garbage. We did secure a win, but I mean, everything's as expected. But like, the problem with it is it looks like we're gonna stay in this large consolidation for much longer, right? Than I would expect it this week to get out of it. But it is what it is, right? All the only thing you can do is just, I guess, trade the day, right? So let's explain how today's bias came initially from Monday, right? Because Monday's high does take this high by a slight wick, these relative equal highs, but it doesn't visit this gap that I'm interested in. Okay. So Tuesday, if we're gonna go lower, it should have held price in this range. New York comes and then we visit that gap, take previous daily high, and then rebalance 50% of the range close, and then allow either go back up or go lower from there. We don't know. Okay. But if we dumped on Tuesday fully, right, we would come down and we could take previous daily low or we couldn't, right? It doesn't matter. Regardless, it's going to be a bearish structure. However, market closes and then the market just dumps on Asia and London. That's not how a bearish market is going to start for the week, right? So if we're going to take this low rather than taking the easy high out right there, more time, this means that, oh, Tuesday's the manipulation. Think about it, Tuesday low of the week. Okay? That's what's going in my head, and that's why I refused to short yesterday, right? I was looking for longs and I actually longed this low, trying to target. I did target the high of the day. It was his midnight price, right? It was a lot, everything was lining up around here. And I just closed myself at break even because I didn't think we have the time. At like, it was basically 11, and this is like 400 handles. It was almost 400 handles run, and I'm like, it's not gonna get there. And then the second that I closed, the next 2 minute candles just shut up, right? I just didn't like the how we're moving in the small time frame. Like right here, we should have went on the next candle, but we just didn't do it. So you know what? Cool, close break even, nothing. Right? So now I'm like, okay, I understand it now. We're gonna go up to take this high because I said this high is not good enough, right? It's taking as weak is an unfinished business. We're gonna come back to it. So overnight, the market goes down in Asia. That's cool. London sweeps the low of the Asia, right? That is very good. So we'd normally, this is how it go. We'd go up, right? Basically till like 7, 8, whatever. And then we go to a discount, taking the initial sell side, right? So normal market would be waiting up here, right? I mean, this is the market open. Like this retracement wouldn't happen, and then we'd go up here, and then we might come back to like this new weekly open gap, any some sort of liquidity, something, right? And then retrace to like equilibrium, whatever the range, and then continue higher, right? That's typical as it is, right? But we go down first, right? Initially at 7, we fill probably a gap. This would probably look like a thing, right? Take some sort of liquidity, and then we'll push higher, and then start stalling. Okay, so that was the issue. So this starts a very confusing session, right? Because I believe that this is minimum the target with the gap that I'm talking about. I'm gonna put all the stuff right because I'm hiding it right now because there's too much stuff, and that is my belief, right? We're gonna go higher. We have to go higher. This like, but we haven't or can't take liquidity at the same time to go higher because then we'll completely change the market structure unless we do it in an aggressive manner, just a big wick or something like something, right? So that's why I'm saying it starts a confusing 9:30 session, right? So what we could have done is this if it shot down, taking this low out with all these and stopped at the new weekly opening gap. but technically it really would have to come all the way to midnight opening price, right? For me to expect this thing to shoot back up. And it could do it, and that's normally how it would do it, right? And or it could do this scenario too, which just is gonna it's gonna go up, but it's gonna stall and it's just gonna be a bit weird, right? And I don't like these days, but eventually I guess I got the trade. So now let's explain stuff on a bit of a high time frame. Let's just do the 1 hour. I'm not gonna go to the daily or the 4 hour or whatever. Actually, it's just max 1 hour 4 hour because we're in a large consolidation. Like nothing really that kind of matters to me on the daily, right? Nothing really. Anyway, so while we're going up, hold up, give me a sec. Let me just check the 4 hour. Right. So while we're going up, I mark this SIBI, right? Because the only thing that could stop us is this SIBI, and we could have a retracement from that SIBI, right? That's what we could have. So that's marked. Remember the gap above the highs? It's on the 1 minute. I marked the small one on the 1 minute because that's the one that's meant to hold price. Other than that, regardless of it, there's a balanced price range on that area. Okay? And then I'm just gonna explain every level one by one because it's just gonna be a bunch of stuff. So remember, this is the gap, this is the SIBI, right? And this, let's get down to, these lines are very important, and that's what gave me the confirmation. This is our opening range gap, okay? So just remember that for now. So as you can see, I was probably clear on this, that we have 1, 2, 3, 4, 5 sell side liquidities, right? That we could go to compared to the 0 buy side liquidities. I'm talking about for yesterday's session, right? Because this is Monday's price. Between yesterday and today, we've taken every buy side, which means we normally do seek sell side from previous. So that's what I'm saying. When we get to 9:30, first thing we do, rather than shoot down, we manipulate up to new weekly opening gap. Then we tail sweep new weekly opening gap, making what I thought at the time. Right, so let's just get rid of this. The first presentation fair value gap. And I'm like, okay, cool. We could go lower from here, and I don't know till where, right? Because it's still not the structure's not that good, right? Because remember, this is the SIBI. I wanted this too, and I was seeing that we were holding the midpoint roughly of the SIBI. So if we went lower, that would explain the retracement, but then we shoot above it and close above it, even on that 1 minute. And actually, no, I don't care about the 1 minute close of that SIBI. On the 5 minute, okay, we could go below it, I don't care, but all I know that it's not going to be the reason to push us lower. So now we can get rid of that, okay? So now we just know we're in free fall, that we're looking for either the shorts or longs, and you can't take any of them out. You could be right for both analysis, right? You could see this as what I've seen earlier as the first presented, right? And you can see the institutional the floor entry drill, and then we go down to what the opening range gap is more likely to visit the midpoint by 10, right? But there was the key right there. This candle is what told me exactly how we're going to play out for today. Going this close to the upper quadrant and not hitting it of the opening range gap and then coming all the way above here, especially this close above the first presented at the time, which I thought, I was like, okay, we're not going to come lower than this, right? It's 10. We haven't even hit the upper quadrant. We're extremely bullish. We're going to take this out first, and then after that, we're going to decide, because if we don't leave it right there, right, you see, And if that was the high of the day, I would expect us to come back lower. But then we go and use that as a inversion, right? I'm guessing we're gonna be holding it, right? To go for higher prices. So I'll explain what that high is. So let's explain entry, right? So now that I know, okay, cool, I can't be bearish no more. That's my confirmation. I wait for a better close on the first presented at the time. We go up, and I'm like, all right, cool. I'm not even gonna enter anywhere in this fair value gap. I want the best of the best entry. I'd get this order block entry. That's it. Price shoots down on my limit, and I'm like, hold up. We should not be taking that low. I didn't even have time to put a stop loss. We should not be taking that low. The second it goes back up to it, I break even myself and get out. See, if I was watching MNQ, I don't know if that makes any sense. We did SMT the MNQ, right? Where is it? And ES as well, by the way. We don't take the low. See, that would have made sense to me. That's fine. But here, that didn't make any sense to me. Why would we take the low? And then I just had a look back and I was like, wait, hold up. This is not the first presented fair value gap. This is the first presented fair value gap. Why? Because look what 930 is done. It's taken all this liquidity. This is one of them rare cases, right? Where the 930 is the first presented fair value gap. Even when I went later, like a few hours after I seen ICT release like a little trade from his, he showed this, and he was using this as the first presented fair value gap, right? So that's just a confirmation, right? I mean, I remember the rules, but it's very rare that you'd use the 930, but this was the day that was 930. So if I was looking back at this and then I see that we go here, take this low out, don't hit the upper quadrant, close slightly above it, I'm not, it's whatever, right? I still have this gap. We use it to its full and then drop lower. We have this gap. We go above it. That's it. That would be my entry. And I might have got break even. I don't know. But regardless, after that break even, and then bodies, top of the first presented, and then going again. The second we invest this, right? I'm watching. We invest, we hit it, and we go up. I'm buying basically on market the second we touch the opening price of this candle, right? So that was my entry. Stop loss at this high, right? I don't expect this to visit the inversion. So think about it as this long, right? There, entry on this candle, and it's actually on this candle, but whatever. Basically on the close of the candle, and stop loss right there. As you can see, I already know when we do this is like basically how it's gonna react. It's not even gonna visit this, but just to be safe, I guess. And you can see we had wicks, and these were SMT wicks, wick. Then we had SMT, and then after that we shot straight to the target. Right, the high I was talking about right here with that 1 minute SIBI. I need to go. So I just take my TP and going inside it. That's it. So quick and easy trade, 130 something points in less than 20 minutes. Not too bad. But yeah, I don't like that break even that I didn't um notice the right first presented. That's just a mistake that I shouldn't be doing by now. Anyway, that's the trade. That's the recap. And now I was just watching prices. You can see on the MQ. I was watching how we're gonna react. Are we gonna come shoot lower, or we're gonna come and get above this gap? Because if we're gonna get above this gap, I have a target on the 15 minute. There was two scenarios how we're gonna get this. We were gonna close bodies inside this 15-minute gap. You can see right there, and only wick into that, and then I'd be still bearish. But if we laid bodies, and we still haven't laid bodies, right, inside this gap, then I do expect bearish price action. And I'm not saying bearish till thingy. It basically means a retracement because now, now this high is very important. It just depends on market structure. The midpoint of that is this inversion, right? You see this 15-minute inversion? That's the midpoint. Also, the midpoint at this small gap is the same price level. Coincidence? I guess not. As you can see, that's the high of the day. So let's just pull that to see. We don't care about it no more. My expectation is if we continue this as a potential market maker buy model, we're gonna go back to this high, which is now relative equal with this. So I expect these highs to get taken. And if we do, then have a visit to this gap at least, right? And then from then we could, so think about Thursday's price action. Like we'll dump a bit and then we'll start launching, go to them targets, and then Friday NFP or Friday could take us there with like the NFP, and then we get dumped back into the range, right? Something like that. That's how I see it, right? And I can't really tell you too much because this market can change overnight, and it's genuinely annoying to trade. It's not the easiest, and there's too many break evens that I'm getting these days. It's just annoying because it's not clear. It always, like New York used to always have basically one option, right? If you wait, it's gonna do this by then, and but now you can see too many possibilities, and it's only that one moment. You don't get this. I would tell you, like, if you were trading, I mean, you could have caught the short to here, but you would have expected more. If you were trading, this inversion was the best play. And then after that, it's just straight doo doo. Do you see what I'm saying? Like, you basically have one chance. You mess it up, bro, you're cooked. Anyway, this is the market recap. Peace out.